Hello, everybody. Welcome to Redefine Tomorrow, the flagship conference by FPD. And it is my great pleasure to be back again this year and to welcome my longtime friend, Tascha, to join this fireside chat with me. My name is Nicole. I'm the founder of APAC DAO. We run a Web3 community in Southeast Asia and support blockchain projects and expanding to the region. And I'm a truly advocate for the region as well as for the blockchain as one of the key growth drivers for our future economy. So joining me today is Tascha, the CEO and founder of INFINIT, and we are going to have 30-minute chats about attention as an asset class. And we are going to be discovering the new primitives behind digital asset price discovery. So again, hello, Tascha. How have you been doing after CBW? Is there any major difference between the CBW this year and 2 years ago? Can you tell us?
Hi, Nicole. Yeah, great to be here again and excited to chat more about, the topic we're going to be discussing today. And as you mentioned, I think the Southeast Asian region, particularly in Asia, has been growing a lot, not just from the user adoption. I think user adoption is pretty clear that it's growing quite a lot, but also in terms of regulations, corporates participating in the space. And I think that's also pretty clear from, both Money 2020 and like Southeast Asia Blockchain Week, where the participants are, not just longer retail or communities, but, a pretty good mix of different stakeholders. And it's just a sign of how maturing the industry has been.
So Tascha, I've known you for some time, and I think you've been like a veteran builder in the space. And we've been through so many cycles that I think we have stopped counting. Just that I think by this year and starting from last year, I believe that we are talking about digital assets and Web3 going mainstream. So not just about crypto price discovery, but it's more about the primitive that is driving real growth and real attention from institutions as well as from government. So what do you think is the real sign, that attention right now is driving the digital asset markets?
Yeah, I think there are quite multiple things we have to take a step back first, right? Because a lot of the time when people think of, digital assets or crypto, they would think of it as, similarly to traditional finance assets, which I think there are quite multiple reasons why we cannot think as the same, although, it's merging into becoming more of a TradFi-like assets. First off, the gap between, noticing a change in attention or like in any narrative, the gap between that and to buying an asset is very short in crypto assets, right? So what I mean by that is that, let's say if you notice that, okay, there are more people getting attention on a particular topic, you can actually, buy a token of that project immediately. Versus when we come to, let's say, TradFi companies or TradFi assets, not a lot of companies are public companies, right? So even if you maybe like, believe in a particular topic or thesis that one company is doing, but that company is private. So there's nothing that you can do to kind of express your opinion on that. Even if the company is public, then the same thing also shows in terms of the time between when you notice that attention to the time when you can actually buy the asset on stocks exchange. Opening a broker account takes a long time. So I think this is the key difference, and also that's also why attention is more of a one of the key input that is highly considered as a crucial factor in digital assets as opposed to TradFi.
So I hear you. I hear you when you mention about, let's say some of the gaps in the market, right? That we are looking to fill in terms of, number one is about this sort of latency and let's say the very short window, the conversion in between attention and signal to, real actions in terms of, short and long, with the crypto market. And the second part is obviously we have a number of, let's say, compliance, governance, let's say policies and regulations for both public and private companies when it comes to this real sort of dive in with the crypto market. So since you also like right on this point about traditional investors, and they are also looking at, like, a lot of them are still maybe outside looking in, or they're like edging towards having more exposure with this crypto market. Do you think, I mean, what are some of the main reasons why you think that, let's say attention has become like a serious market input rather than just like social noise or FOMO around the market?
Yeah, I think when we think about it, crypto assets are, universal, right? It touches everyone, no matter, their background, their culture. So it comes down to what resonates to, this diverse group of people the most. A lot of times, when traditional investors think of investing, they may try to look at, revenue, fundamentals, which is great. And I think as an industry, we're heading more towards that. But, within crypto industry itself, everyone is pretty much, also driven by the psychological effects as well, in terms of what's going to get attention, and what does that attention would translate to. I think one point to note is that because the barrier to launch a token is lower than the barrier to drive the company to public, then that means that the type of projects that have tokens are much earlier types of companies than companies that have equity or stocks, right? Which means that a lot of the times investors, especially in digital assets or crypto, are looking to get in early to make sure that it capitalizes from the huge growth of the early projects. And because the growth of the early projects may not fundamentally reflect in revenue or anything like that yet, because it's still early. So that's why people try to look for different signals that help them capture the growth better. Yeah, so I think that's also the key difference between the two types of the markets.
So we are now diving right in, what are some of the signals? What are some of the metrics that we need to look at, especially with, let's say, first-time investors or traditional investors when it comes to crypto markets. So since, I do feel you when you mention about this lower entry barrier for launching a token. And obviously for us crypto people, we think that basically this market is definitely much more accessible than traditional market. But obviously we cannot really leave without the mass market or the traditional investors. So if you put on this, let's say, lens or perspective of traditional investor, what are some of the metrics? What are some of the attention kind of span that we need to look at? Is it about developer mindset? Is it about social share, social footprint, or is it more about some of the mainstream signals? So what do you think would be, or the whale behavior? What do you think are some of the key metrics that you would advise the traditional investors to look at?
Yeah, I think we need to understand first that not every attention is good, or not every attention is the same. So we can, break it down to two types, organic attention and inorganic or like manufactured attention, right? So the way that I would look at this is you have to look at the comparison between value the project provides and the attention that it gets. So if I have to pick one metric, it would probably be that metric, value versus attention. So what I mean by that is, in order for you to evaluate whether that attention is actually worth noting or like worth doing something about it, you also have to look at what value the project is providing. Because if the attention is massive and everyone's talking about it, but the project is not delivering any value to the consumers or to the users, meaning there's no product, or if the product is not that helpful to the users, then in the end that attention would not last as long, or that attention might have been a manufactured attention as well. So when in terms of like investors looking in or trying to understand the space, then I think they have to understand this relationship between what value it provides as a company or as a project, and does it match with the attention that the project is getting.
That's a very good point. So I think you've mentioned about not all attention is good. So there are definitely different types of attention. And we also talk about, let's say the correlation, or let's say the discrepancy, or I would say maybe there's a lack of correlation in between the attention and the values. So sometimes some of the products that can create value they do not get the attention that they deserve. And on the other hand, of course, like there are some projects which have been able to gather or wreck a lot of, attention on social. It doesn't actually like bring real world benefits to the users. So I think in this, let's say within this kind of context, what are some of the, let's say, entry points that you think we should consider when we ourselves look at this correlation between values and the attention? Is it about social media momentum? Is it more about, the on-chain positioning? Is it about the KOLs or ecosystem participation in the new product? What are some of the, let's say, the very first kind of onboarding or entry gates that we need to look at when we consider a product, or when we consider like the attention and the values that kind of correlating to each other?
Yeah, I think to understand like how we can analyze the attention it's getting, or like where do we even analyze that, or in terms of the value what the project is providing, right? We have to look at what are the stakeholders of that project, and in my opinion, if the stakeholders are pretty much aligned in terms of the value the project is providing, it's gonna show in the price, right? And attention is going to be reflective of that as well. So by stakeholders, depending on different projects, if the project is building for developers, then developer mindshare would matter. If the project is building for end users, then of course we have to see if there are a lot of users using the product, what value the product is providing. But not only just that stakeholder, but also retail traders, community, big traders as well, private investors. So I think it's going to be hard to look at one metric, because I think crypto is a very intricate and complex industry where a lot of things interchange and impact each other. But kind of like a top-down analysis, I think would have to analyze from different stakeholders' perspective, and think, okay, if this is valuable in terms of the project as a whole, and attention is going to be a result of that, because let's say if it's valuable to retail investors or to community, then they're going to talk about it. So you're going to be able to hear the attention, or notice the attention as a byproduct already.
So I think again, it's going to go back to the product fit for market fit kind of story. When you can actually prove value to the community of your stakeholders, then without any sort of unusual market behaviors or users behavior, then that's going to translate into positive attention to the project, right? So I really like what you mentioned about, let's say you have to really look at the stakeholders of the product when you kind of measure all of these or analyze some of these like signals or attention. And I think traditionally in crypto, we have been pretty much talk about, signal attention all the time. But not a lot of the time that, we actually focus on the product from the beginning. I think maybe because a lot of people have associated attention and, signals with crypto. Crypto markets cannot live without like attention, without its signals. Do you think there will be like a turning point, or there will be like a point where we actually think about crypto as a product itself, but not just like a signal and also like attention based product?
Yeah, I think it's already happening, because and it's also a logical flow of why it's changing as well. Because if you think about it, when everything's driven a lot by attention, different people try to manufacture attention or try to game the system, right? Of course, every industry has bad actors, and it's not exclusive to crypto. And when those bad actors, exploit the system more and more, then a lot of people get hurt. Get hurt from different ways. They get hurt from from buying into something that is manufactured and it's not organic growth. And later on, they realize that, oh, like they're not buying the real project, they're actually buying a fabricated project, right? So many of these scenarios happen until which the market just says, you know what, let's take a step back and look at more of the fundamentals. What are the revenue? How many users are using? What's the expense? What's the net profit to the whole project? And what's the token utility? What value is being driven to the token holders? So I think we're at that stage right now, and I think it's a natural progression of every industry, and I think it's a good transition, because without this transition, it's not going to be possible to clean up the bad actors in the space, because there are going to be a lot of loopholes to exploit the system, as we have seen. Yeah.
I think that will be like the dream of everybody, especially like crypto people, where we actually think about the core and the nature of the product instead of just like following signals. And obviously, when we can actually like kind of erase part of the noise in the market, and definitely, we can definitely like weed out some of the bad actors and basically just allowing more healthy growth of the market. And you mentioned a lot about this fabricated versus organic attention. So let's say from a newbie perspective, what are some of the easiest ways for you to actually detect and separate the fabricated from the organic signals? So we're talking like 101, like how you can actually kind of validate a product from that point of view.
I think, well, there are two ways that you can approach it. I think first way is we can approach it from like the social metrics. So for example, a lot of the fabricated projects would have like very, very high followers. So if the number is like way too high that it raises a question to you, then that should be a first signal. You can also kind of benchmark the number of followers with engagement of each post. So you can see, how organic or inorganic it is. Looking at the comments also helps, because if it's a lot of AI generated comments, or some random comments, then those can also be paid for as well. So there are multiple tips and tricks where you can spot these signs, whether it's fabricated or not. The second lens would be looking at the product. So if you open their product up and it raises a question of, how is this useful? How is this valuable? And there are so many blockers in using the product, and the product just have a lot of bugs and doesn't work. Then that's also a big red flag in terms of, okay, if the product is not really working, but a lot of people are talking about it, then again, there's a mismatch between the value it's offering and the attention it's getting.
Okay. So, I mean, we've been able to cover quite a bit about the market, the signals, the attention, how to tell from a fabricated versus from an organic sort of type of attention, and what are some of the entry points, what are some of the exposure that you can actually, validate about the product, and kind of, use the signal, use the attention in the right direction. So now we're going to be diving in what you are building at Infinite. And I know that you've been, like a truly huge fan of, AI agents and how they are transforming the way that we are interacting with crypto products these days. And I think since we are also talking about all of these attention, do you think, I mean, how first of all, how do you see this whole AI agents kind of, adoption disrupting the whole attention landscape? Are they helping? Are they not helping? And how would you be able to, kind of really use them to your own goods if you are like a builder, in case you are a builder?
Yeah. So I think everything has pros and cons, right? And the value capturing may not be linear, meaning like not everyone would be able to capture the value. The value might be able to capture it among small group of people. So grand scheme of things, I think AI makes attention easier to capture, and also making it less advantageous for retail, in my opinion, because a lot of the let's say big companies or even like developers who leverages AI agent systems or projects who build AI agent systems, they're going to be able to leverage the tech itself to capitalize from noticing attention earlier, as well as noticing the relationship between attention and capital, and being able to allocate capital more efficiently and more effectively. Which, on the other hand, it means that if you're a single, retail person, it may be disadvantageous because that means that there is a huge information asymmetry between those companies with AI and you yourself. So I think based on that, that may be, like a con for a normal individual, but I think the pro for the normal individual is actually that now there are going to be so many AI assisted products that are available for you that actually is, functions in so much better and more efficient and allocates capital a lot better than maybe you're going to allocate yourself. And these companies are going to build and make the products available to the retail, right? So as competition gets, higher, as the tech gets better, the quality of the products that are available to the public is going to increase, and that just benefits everyone on the consumer end. So one example to this is that we're building a new product. So we have the current product already, which is an AI systems that help users allocate and execute different DeFi across different blockchains, across different DeFi applications. Without the product, users would have to do like 24 manual steps by themselves. Now, us, leveraging AI, we're building this product to enable convenience and a lot of these capital efficient systems to the retail. So more and more of these products are going to be available to the end users.
So I have a quick question, and I think this is an unscripted one. But since you are also like you are working as a platform, right? And you're also like helping to enable the developers, of course, to build products in a more efficient way. And obviously that's going to help a lot of the retail as well in terms of executing, let's say, their orders, as well as to help them to, make the most and capitalize on the crypto market. Do you see yourself, I mean, as a platform provider, I mean, how do you see yourself like kind of trying to neutralize some of these conflict of interest, let's say in between the builders and the retail? Obviously, they are both looking at maximizing their investment as well as the time. But most of the time when you're in the middle and you're stuck with this kind of managing this conflict of interest, do you believe like in a flat out, totally neutral, open market where, it's like just leaving the market just to make their own decision? Or do you see yourself having a more sort of steering and also like a more active role in helping everybody to get what they want, to achieve what they want from the market?
Yeah, so I think the way that I approach this is we offer two products, depending on what users want, right? Because not every users want. So there are two products. Meaning the first product that we build, Prompt to DeFi, is more active management needed on the end users, right? But what active management means is that you have to actively monitor, you have to actively check the DeFi strategies that you execute. But the pro of it is everything is non-custodial, and you make sure that everything is within your control. The AI is not going to do anything weird if you're sleeping. Some people prefer that, but some people also say that it's very, very troublesome because they just want a one-click product where they deposit and the AI like manages for them. So we have another product which we are building, focusing on trading, particularly, so agentic trading, and to prevent AI to make the wrong trades. What we do is we separate the AI brain out from the technical execution. So the technical execution itself is more of like a rule-based risk framework that ensures that there are multiple like if-then statement to make sure that the system is safe. And if anything deviates from that, then a certain actions would be taken. But the AI brain itself is very much the AI brain is very much like a big trading firm brain, in which it tracks a history of like 1970 trading history to make sure that it learns from the past and suggest the best trade for the users. And for this product, on the user's end, it's passive, so you don't have to actively manage. You can just do one quick deposit, and the AI would suggest a trade for the system to automate. So yeah, in order to kind of answer your question, we offer two type of products because there are different group of people that want different things.
I really like that approach because I do think that would basically, I would say, like basically cater to different set of different types of investors and stakeholders in the market. So I think it's a very interesting point when you mentioned about, how AI can actually enable and help sort of, flatten out some of the differences or discrepancies in terms of access and maybe potentially resources for users as well. So for instance, we're talking about, before with the trading market, right? So of course, we're talking about the whales and some of the key market players. They have, I would say, some of the absolute advantage in terms of information access as well as capital ownership. Does AI help flatten out the let's say the trading landscape now that capital ownership is not the key point anymore? And people can actually gain a lot more edge in terms of distribution or access to information or, like social media kind of follow up. What do you think about this sort of landscape?
Yeah, I think it's not just recently that AI or tech has given a lot of advantage to those who know how to leverage it to get more information, right? So we see this a lot in traditional finance already, where different hedge funds or different funds use AI and algorithmic trading to automatically trade and get ahead of the competitors. So it's not new, but I think the difference here is that when AI is so much more advanced nowadays, and the like the access to AI is no longer, you no longer need to be a developer. You no longer need to have like a whole system set up. You just need to, have like maybe like one server that you have and like just $20 or $200 maximum cap, then you're able to build anything. So I think it really changes a lot of the questions, like what value is human creating, and like if you're going to build something, how are you going to be able to differentiate yourself from others, because now anyone can build anything, right? So I think when we reflect this back to crypto markets, then it makes it, of course, more competitive in terms of the way the traders can get alpha from anywhere, because now it means that AI may get alpha first before humans do, and if that's the case, then we don't even know whether we're trading against each other or we're trading on like the early news.
I think that's a very fair point, about how we are kind of differentiating versus AI versus humans. And I think also similarly to how vibe coding has disrupted the coding sort of practice. So basically for now, I mean, like AI has already kind of lowered the entry barrier for a number of people. I think even with traders, even with crypto newbies, getting or entering the market is not the main challenge anymore. It's more about how you can actually kind of leverage AI to your own benefits or to your own advantage, and how you'll be able to play out in the market. So imagining this world where, of course, we have humans and AI, how do you see the role of humans are going to impact, are going to be factored in this whole AI power landscape? What are some of the differences that humans can bring to this whole sort of, model? And in that kind of context, who do you think would matter? Who do you think would play the key role, in shaping this sort of landscape? Is that agents? Is that the developers? Is that the traders and investors? So we are going to be talking a bit more about the visionary, like kind of sort of look at the future.
Yeah, a very interesting question. And I think to think about this, we can think from how the world works currently, and then we can see from each dissection that where value is created, and therefore if these are being replaced by agents, then what's left for human, right? So with the current world, let's say whether you're offering product or services, that product or that services itself is valuable. So that's the output, right? Now, if we change the people who do those products, or the people who build the product, the people who provide the service to agents, then that means that we're replacing the working body already to provide that output. So now the agent is actually valuable instead of human. Now then the question is, okay, if every product is being able to build out by these AI systems, then there are going to be so many products, right? So the key difference is going to be how each product gets discovered or how each product gets distributed. And I think that's still going to be a role for a human to play, because at the end of the day, humans are consumers, whether they're consuming human products or they're consuming like AI products. So there have to be a system to efficiently distribute the product still, and that means that there are going to be a lot of like roles that have to change in terms of different jobs that are needed to get the AI products discovered to AI, when we reach to that point where AI is a consumer. But I think as of now, when humans are still the consumer, then there are still going to be, a big gap between how we get the product that's built already to distribute to the right, consumers. And, that's going to be the part where humans play a big role. So that comes a lot down to, connections, relationships as well, and different ways that you understand consumers and do the marketing towards the consumer.
Thank you very much, Tascha. It has always been a pleasure, like chatting and learning from you. With the in crypto, from crypto and AI and Web3 space. So all the best with Infinite. And again, thank you to the co-host, the host, as well as our speaker here for contributing to our session today. My name is Nicole, and thank you all for listening.
Thank you so much, Nicole. Thank you everyone for tuning in.